there's been this whole issue of what's happening with tax collection and the tax collection measures that are being implemented by the Kenya Revenue Authority. We just read this story of how lawmakers, members of the National Assembly Committee on Defense and Foreign Relations, who are saying, no. There's harassment of Kenyans and visitors to Kenya at the airport. But the Kenya Airports Authority, Kenya Revenue Authority officials. The chairman of that committee, Nelson Koech, said Kenya is instead working on how to grow the number of tourists visiting the country. We are entering this peak season, but what we are hearing coming from the airport is that our visitors are just being harassed. And it comes on this whole issue of when you come into the country and you're going through customs, there are two places. Something to declare, nothing to declare. Declare. As long as you've landed, they have declared you.
Yeah, if you like, declare. If you like, don't
declare.
They
have declared you. They really come in kikombe. Kikombe gani? Ati ni ya Brookside Dairy Best. Kikombe inakaa 70,000 shillings. Hii inakaa 80,000 shillings. Lipa tax. Lakini
tuko na code.
Lipa tax. You know? And there's all this harassment. There's that story in the Business Daily. There's a story in the Standard as well. And the Standard story has actually talked now to passengers who've arrived and they are complaining about the kind of harassment that they're receiving. This is what we want to discuss this morning. We are joined by a tax professional. His name is Evans Kithinji. Evans is also the founder and CEO of Gilded and Bright Africa Limited. Good morning, Evans.
Good morning.
Welcome to Kenya's biggest conversation.
Pleasure to be here.
To the hot seat of the Situation Room.
Yes.
To welcome you into this conversation, CT has the day's proverb, and the proverbs for this week are from the Republic of
Burundi,
whose capital is
depends. Its political capital is called Gitega. Its economic capital is Bujumbura. It should depend, yo.
You may depend for
Buju
Bura. Not many people can really say just Bujumbura like that. Really.
You have to break it.
You have to
Buju. Then Mbura.
Why not?
And what is that again?
Bujumbura. Okay, the proverb.
A night without roosters still ends.
A night without roosters still ends. Evans, you listen to this show.
Yes, I do.
So you know what's going to happen next.
Yes.
Okay, go ahead. What's your interpretation of this?
What is going to happen, or what is ultimately expected to happen, will happen. Whether the
Kithinji.
Despite whatever efforts you'll make it, or attempt to make to stop it.
And you know what Kithinji means?
Kithinji on Dekni.
Okay. Whether you shake or wiggle, yes. It will happen.
It will happen.
Yes.
So what is meant to happen will happen.
Will happen.
Whatever will be, will be.
Yes.
Que sera, sera.
Yes.
Okay, so sing the song then.
Que sera, sera. Whatever will be, will be.
The future's not ours to see.
Que sera, sera.
That's the song.
Karibu sana. So Evans, you've heard, of course, and you've seen the complaints on social media in various platforms on what's happening with this. We'll start with the JKIA issue, and then we'll go into what KRA is doing to try and what they're calling avoid tax evasion, curb tax cheating, and collect more revenue. So what's going on at the JKIA? People are complaining that they are being harassed by KRA officials. That, you've come in, you went out there, you saw a nice item, you decided to buy it, you're coming with it into the country, and they're telling you lipa tax. You're like, ni yangu, siendi kuuza, si ni yangu tu ya kutumia.
So basically what is happening is that KRA has woken up, finally.
Allah.
From where I sit.
And where exactly do you sit?
As
a tax professional.
As a Kenyan, okay, who's got with the tax law.
Right.
because the law has always been in existence, stating that upon entry you're supposed to make your declarations. Okay. Now, by them enforcing now and insisting that you should be able to make these declarations when you come in, this should be now normal practice among Kenyans, so that when you go out there, first you're cautious. How am I leaving the country? Have I made the necessary declarations? And when I'm coming back, have I made the necessary declarations? Or am I willing to make those declarations?
Pause. You're saying this is the law.
Yes.
I will now start. Tell us, what does this law say?
Now, we have the East African Community Custom Management Act, which generally gives guidance as to how goods will be moved into the partner states. Now, the partner states, that's Kenya, Uganda, Tanzania, and generally the other East African community countries. Okay. So before you bring in your goods, there are provisions that have been set in law that you need to make a declaration of what you are carrying on yourself as you travel. Okay. If you, for instance, leave the country with a laptop, expensive MacBook, probably the wise thing would be make that declaration, because the law requires you to make a declaration of the goods that you're bringing in.
Right.
Likelihood is that some of the goods that you have on you will exceed the required limit of $500 or an equivalent around 75,000 Kenyan shillings now. And upon making that declaration, the custom official then will have to make a determination as to whether these goods are taxable
or not,
or dutiable for that matter, or not.
So when you're leaving, you must declare everything that you have on you.
Yes,
I'm
it's
wearing
important.
this expensive watch, I'm carrying a laptop.
Yes.
This shoe of mine that you see here, by the way, is worth 250,000 shillings, but who's asking, all those things. When you come back into the country, you're also now matching on, this is what you left with, this is what you've come back with.
Yes.
And if there's something extra, then you pay a duty for it.
That is now what is going to be subjected to the threshold of 500 USD. Now, one important thing is that when you make that declaration, there's a form you'll fill, there's a receipt you'll receive.
Okay.
Now, that receipt, you need to retain it until you come back into the country.
Okay.
So that then you're not asked to pay duty on items that you owned before. Okay.
This law has been there.
This has been there.
Okay. What has been the rate of enforcement of this law previously and the rate of compliance?
Now, in terms of enforcement, I'd say it's been dismal. Okay. Because primarily, at the point when you're leaving, the customs official and their responsibility is to now look out for restricted and prohibited goods. Okay. They're not worried about what you declare or not. Okay, so they'll be looking out for drugs. They'll be looking out for
pangolin schemes.
Yes, and things like that. They'll be looking out for precious
for scissors, nail cutters, those ones.
Yes. So they'll be looking out for those things. Okay. They'll be looking to see if you're trafficking drugs and all that, and they'll want to prevent that, so that Kenya is not first known as that. Yeah, conduit for the movement of such goods. Where there are restricted goods, then you need to have approval to move those goods. Okay. Now, when you're coming back, is where now the ball changes, because now they're not just looking at restricted and prohibited goods. They go now the extra mile to look at now what is on you as a person. So, what are you carrying?
Right.
And what is the value?
Right.
And has the necessary duty been paid? Yeah.
Why 5,500 USD? Is it 500 or 500?
It's 500 US dollars. Now, that is a restricted amount placed. It is not, how do I describe it? It's not, I don't understand how sometimes they arrive at these figures, because from where I sit, I think some of them, the values are really low. Okay. Because if, for instance, I would buy a phone, the new iPhone 5 costs over 200,000.
Yeah.
Okay. If I bought it in Kenya, and I'm coming back with it, you see, I'll have to have made my declaration.
You have to declare when you're living.
Yes, so those limits, some of these limits are really low. As to the reason and to the basis as to how they are usually generated, sometimes it is through concession as partner states, and they agree that the limit we will put is 500.
Okay.
So to hazard a guess, just hazard, why would you think they benchmarked it at 500 US dollars?
Probably they try to estimate the size and the commodity.
They're widening a tax base.
But generally, also looking at it from the other perspective, it's yes, exactly widening the tax base and making sure that they can be able to get as much revenue from these commodities. Yeah.
You speak about concessions and partner states agreements and things like that. So if that would be agreed in terms of what then would be paid, we also look at these items that you would buy wherever you're coming from that has already had a tax applied on purchase. So could you explain then how that would be also reapplied when you come into the country? And what kind of tax are we looking at that they're saying? Because you did pay whatever it is in the country of origin, income, VAT, etc., etc. What would this tax then that you're being asked to pay on an item that you then brought in for your own personal use, right? Clothing, shoes, whatever, electronics, the rationale for an additional tax on that?
Okay. This being a jurisdictional law and the East Africa community being a jurisdiction under customs, the idea is that when you move goods from a jurisdiction out, maybe jurisdiction outside the EAC into the one of the partner states, then they have to have determined the value. Now, to arrive at the value of this commodity or goods that you're carrying, they look at probably the price which you paid for it.
Yeah.
Generally, they look at their taxes that you paid. As VAT works, ideally, you should have gotten a refund for the goods.
If they're exiting the country.
If you're exiting that country.
Right.
But when they get to Kenya, they look at the cost of that good. They look at any other taxes that were levied on it to arrive at that price. Now, if you incurred any transportation cost other than probably having it in your luggage and all that, they'll include that. Then they will apply what we call the customs duty. Now, the rate for custom duty differs depending with the kind of good or the state of the good you're bringing in. So you'd find finished goods would have a higher rate than when you're carrying semi-finished goods or raw materials.
Completely raw materials.
Yeah. So at that point, the rate of duty will apply. And then if it's the good you're carrying is also vatable, then VAT will also apply.
Okay.
Yeah. Now, that is with regards to the mainstream kind of taxes. Now, you'll find there are other levies that will also be lumped on goods that then you pay and get your goods. Yeah.
You talked about KRA finally waking up. What do you mean by that? That this should have been something that should have been applied a long time ago, and looking at that vis-a-vis the sentiment around the country today, whereby, oh my goodness, it's already so tax heavy, and here we are now looking at another source. So there's that where the law has not been applied and implemented, or that the authority or service, which is soon to be, is looking for another way to rack up their collections.
Okay. When I say when they've finally woken up, is that they've been put in a situation where the demand for them to meet their tax targets is so high. That now they're racking up their heads and they're going back to legislation to see what they should have implemented and had not been implementing in full. And now they are making every effort to make sure that they do it. Okay, so that's a challenge, and that's why I'm saying they are finally woken up. They're finally woken up, and you'll notice this across other tax heads as well. You know, you'll see efforts. Like for instance, until around 2016, they introduced what we call the residential rental income tax.
Yes.
Okay. Before that, not that residential income was not taxable, but they realized that they have to make every effort possible to meet the target that had been set, and so they had to find a way of making that effort to collect. Yeah.
Tourists who are coming into the country, because you see, like what the Honorable Nelson Koech was raising, is the issue of tourists also complaining that they are feeling harassed by KRA officials at the airport. What is the procedure for them? So they're coming into the country.
So
I am coming on a tourist visa. I have an itinerary that is taking me from the coast to the Mara to some wherever. I have a camera. I have a tripod. I have a pair of binoculars. Whatever I have. Should they also pay taxes for all these things?
No,
I have a
ideally-
laptop on which I will transfer these things.
The Customs Management Act has been structured in such a way that then tourists would have a preferential treatment of sorts. Okay, so that then when they're coming in and they make the declaration, so of course they'll show their passports with the visas, they should be treated as tourists. The items on them should not be, or whatever they're carrying should not be subjected to those very in-depth reviews. Okay, however, there is a caution which has been put in place so that you need to be in and out of the country within a period of 3 months.
Okay.
So if you're going to be here for more than 3 months, then the ball shifts, and now the carrier would be curious as to what you're bringing in.
Okay.
Interestingly, some of the items like cameras,
binoculars,
those items, electrical items mostly, are usually treated as being items which need to be, a declaration needs to be made. Okay, and it's even when we have the rally drivers coming to the country and all these other guys who come to do performance and do the filming and all that, they have to make temporary declarations. Yes, that we are bringing these items, we'll be in this country for this long. There's a fee they'll pay, and they'll get their permit, bring in the goods, and after they're done, they just need to show that they've taken the goods out. And
Will they be given a
they'll get the
refund?
No, that is a one-off payment.
Okay.
But where you fail to meet the requirements, so you're required to be in the country for X or to carry out all your goods, and you start leaving some, then the Revenue Authority has got room now to enforce.
Who determines the value of these goods?
It's a customs official.
Official.
Yes. So
Okay.
The one
based
you're
on what
facing.
based on what you've declared. So you make a declaration. I bought this cup at 1,000 USD. Okay, so they'll do a review of what is the market price. So what is the price? So based on the invoice. Okay. Other than that, where you don't have an invoice, then there are other methods they can use.
So essentially, if you've bought an item, it is in your interest to come with a receipt.
Yes.
That receipt is what is used.
That is what is used as a basis.
So this power that is given to the customs officer to determine what is it.
It is now to determine the value, in the sense, assuming a situation where you do not have this receipt. So they will look at what is the price of a similar product in the market, or what is the price of this kind of product. So they look at similar products, identical products, and then eventually, through that chain of command, they have got a point where they have to make a determination and then apply the duty that is applicable. Yeah.
You're
So-
a Kenyan living and working in the diaspora, okay? So you know I will travel back to the country next year in December. You start buying some few items here, buying
Gifts for relatives.
a calculator, because I know my nephew will be sitting KCSE next year, so let me start buying the calculator early. All those kind of things. It's over time.
Yes.
You've brought. Those are separate. There are those items that you've been using, and you're just coming home because sasa ile nyumba ulikuwa unajenga umemaliza, you want to leave some of these items. You start your journey towards coming back. Is it the same? Should you be paying duty for all these things? Kuna
Now, at the point,
microwave nilikuwa nimenunua, nimekuwa nikitumia China for the last 10 years. I just want to bring it back home.
so at the point where you'll bring in your goods without paying duty is when you are relocating back
Fully.
Back
fully.
home. Okay.
Okay.
Piecemeal.
Piecemeal, you'll pay. But when you're coming back home, you make a declaration that I was in this country. I've been there for over a year. I own this and this assets, including this motor vehicle, one motor vehicle, which has to be over a year old. And then they give you the window to, or the room to bring them in without paying the duty. However, if, for instance, you realize I'm going back in December and I need a newer vehicle, and despite the fact that you've been away for more than a year, you buy this vehicle and it doesn't get to the 12-year mark, that vehicle will not be admissible without you paying duty on it.
Okay.
And
meeting the other requirements
to relocate.
that relate with the importation of vehicles.
Okay.
How many times am I allowed to relocate?
Once.
What do you mean?
You will come to Kenya unless now you're recalled, because there are instances where you'd move back out for assignment and then do another stint. Then, but I think what I've seen the law state is that you're given a window of 2 years, especially for motor vehicles, if it's a vehicle you had been using. If you had brought in that vehicle based on other conditions, maybe you're a diplomat or you're a person living with disability, then you have to wait for 4 years.
I'm glad you mentioned diplomat, because say one is a diplomat in one country, term of office, tour of duty comes to an end. You relocate. You're given another tour of duty. Okay? It'll end. You come back. That's why I asked the question, how many times are you allowed to relocate? You may have an international job. Again, tour of duty ends. You come back. You get another stint. You go abroad. So
I guess, Evans, you can, if we're talking about if you've been living in a certain country for more than a year and you're coming back, that's considered a relocation.
A relocation.
Okay, and you're saying I'm relocating. So once you've come in, if you go again to a different country, you must have lived in that other country for at least
a year.
So you can relocate as many times as you like.
As long as you're not relocating within the year. Spice. Conversation continues with Evans Kithinji. He is a tax professional, founder and CEO of Gilded and Bright Africa Limited. We are talking about the Kenya Revenue Authority and the backlash it's facing now from what it's doing in terms of just tightening the enforcement of the law and collection of revenues. We've just been talking about what we are seeing at the Jomo Kenyatta International Airport. You're saying they're finally doing what they're supposed to have been doing anyway. Are they doing it the right way, though? Because there's enforcement. Yes, there's a law. But why do people complain about police officers? There's a law. But are you enforcing it the right way? Are you communicating it the best way that you could? Are you handling people as if they are your partners in this? Or are you handling people as if they're just rogue people who are seeking to run away with your money?
I would say that the Kenya Revenue Authority and especially the customs officials would do a little bit more in terms of their soft skills, because sometimes when you approach someone who has not been in the country for long or who has been a frequent flyer and is now facing these new challenges, you need to at least warm them up into it. Okay? And so a lot of public sensitization needs to happen. A lot of trainings needs to happen. A lot of people, as in, they need to make this information readily available when you're walking away or flying out, when you're coming back in, and they slowly warm you into it. But anyway, targets are targets. And so, no, if you allow me to say that, targets are targets to the extent that, you see, these guys have been given a threshold which they must achieve.
They will not achieve it the way they're going, that's for sure.
See, that's the thing.
Yes, they may not achieve it, but we see
will not.
Yes, for them, they will be under a lot of pressure to deliver. They don't have requisite time or enough amount of time to go through these soft skill trainings and everything. They need this money now, and so that creates the challenge. The challenge which is always there. But anyway,
you know, you are not the Commissioner General for KRA.
Yes.
So don't take this the wrong way, okay? What is so difficult in ensuring that this thing is communicated to all the partners who are involved in this business called travel, so that anyone seeking to travel has an opportunity to actually understand this thing you're saying, sensitizing? People go through travel agents. They can do that for you. if it's Kenya Airways or whatever airline it is, it can be done so that at least the information is available. And usually when you're on a flight, you have time to read. Even if you're taking a short hop from here towards Kisumu, it's what, 40 minutes? You can read. I'm simply saying that the requisite attention to ensuring that an understanding of why these taxes are being levied or the enforcement is being put into place is necessary. If you jump on people's neck with a tax, even if it is in the law and they don't know it, for heaven's sake, yes, you have every right to enforce it. But if your idea is compliance and to want to be able to collect money, then people need to have a buy-in. They need to understand. Even if they don't agree, at least they understand.
To some extent, I would agree with you, but listen to this. Ignorance is no. Ignorance of the law is no
the
defense.
most nonsensical thing
The law is there, it's available for taxpayers
I know they keep saying that ignorance is no defense, all right?
Yes.
But you've got to make me aware. And I was arguing with somebody yesterday. All right, so I'm on a highway. There's no right turn. Should you not put a sign that shows no right turn? And then you find me having done a right turn and enforce the law and say, there is a law, there's a reminder.
It's clear.
It's clear. There's a signage on the road. That's why we have road signs.
Yes. I agree.
It's the same kind of thing. Road signs are there to remind you of the law. Okay? It's the same. You have this tax declarations and all at the airport. Remind somebody and just take them through it. And if there are those who may not be aware, make them aware. Just show them. Tell them. There's somebody who's complaining on live stream here. They're saying they came back to the country on Sunday. They're yet to collect their 2 suitcases, which were marked with blue X. And they've been told that they have to pay 75,000 shillings duty.
Wow.
Suitcases, X.
And they stay here.
75,000 auchukui.
Okay,
I mean,
well,
what is that?
Then let's end it at a softer position that we both need to take initiative. We as the Kenyans, we need to take initiative, plan our travels, understand what is a custom requirement.
Right.
Okay?
Right.
So that then we can make those declarations beforehand.
Yeah.
And yes, the commissioner and the revenue authority generally need to take a softer stance at first, need to educate, need to make sure that this information is readily available.
Yes.
So that then both parties, and especially Kenyans, don't feel aggrieved. Yes.
It's very perplexing. You collect money from us. It's called taxes. We pay you a salary, and then you use that salary to harass us. It doesn't really make much sense, does it? Huh?
It sounds interesting because here we talk about 2 things that are in play. There is the compliance issue, which as a tax authority, they've got to make sure that everybody is doing what they need to do to give to Caesar what's due, right? But then there's also the revenue targets that they have. And I see this as the monster that usually sits on the back of anybody who works in the authority, because that is the thing that's driving you at that point. And so then you are bereft of any kind of sympathy or empathy, or even trying to have some basic comprehension of anybody's situation who's coming into the country. So then for me, what it does is that it brings about counterintuitivity. Because it becomes counterintuitive. You will not be able to get this revenue that you seek at the same time trying to get everybody to be compliant, because people will find a way to avoid paying this money. People are going to go buy things and then they're going to take them out of their boxes and they're going to come and tell you, well, it's mine. And they're going to say, look, it doesn't matter. But people will find a way to avoid it if it already looks, from the get-go, it looks punitive. And hadn't we ought to look at a way in which it is not as though it is a punishment that is being served on Kenyans or anybody who comes into the country, because right now that's how it looks. That's what it looks like.
And I agree. Yep. And that's why I'm saying then that aspect of getting that training out there is very important. Now, the Revenue Authority and their targets. In fact, they really don't have anything to do with the targets per se. Their job is to collect the revenue. The targets are set by another arm of government, the Treasury. Now, these targets which are set on them, sometimes in consultation, but sometimes they could be also unrealistic, because you're seeing, we've seen like almost 100% from what was there in 2021, 2020, around that time.
The
and
target
what
has...
and what is being demanded now.
Right.
And so pressure is being exerted. And yes, we have seen instances where the Revenue Authority have lost the face, the human face, so that then they have been given even the instances where they've closed accounts to businesses, and they still demand that you pay. They have, you've tried to explain.
Yep.
My business has been affected in this and this way. I cannot be able to generate this income now. Give me a payment plan
time
that is
Works
sweet,
for
yeah,
both
works
of
for
us.
me and works for both of us. But they'll insist on you paying within maybe 3 months, 4 months, 6 months.
And most times that is not possible.
And that is not possible. So it's almost like they're setting you up to fail. And they come back and exert more pressure on you.
You know, that particular way of doing business seems to be Kenyan. Someone has authority, and for some reason, they must stick it to you. It isn't getting you to comply so that, yes, you may not like it, but you don't have this residue of resistance because you feel you're being pushed into a corner. And yet, I'm arguing that it is really not necessary. You see, the idea of collecting tax and collecting more of it depends on how much we generate. Now, if your approach is to collect at my expense, I will shut down. And when I shut down, if it is money you collect from income tax, gone. If it's corporate tax that you get from me, gone. If it's the things I buy to conduct my business, which also attract taxes, gone. So the net loser is KRA, not me. I will shut down and do other things. Or I'll go home and look after my goats and cows, whatever it is. But knowing KRA, they'll even come and tax my cows. Now, how do we get to a point where we understand that the idea is to collect more money? And how do you do that? You enable the economy to grow so that there is more to collect. This particular process that we now keep seeing being implemented, we understand the need to raise the taxes. But isn't there a greater need to also grow the tax base so that when it is you're talking about taxes, there's more to tax?
Yes, and that's why actually there's a discussion around a tax policy framework, which then gives a kind of clear guideline as to how the government is expected to collect its taxes, and also kind of makes taxes predictable and easier to comply with. Because if I know that this is a requirement, and it's for my, now the responsibility shifts to me to start preparing way in advance to be able to meet this requirement. But as you've seen in Kenya, mostly with most of these finance acts, every time we read there is a change.
There's a new thing.
There's a change to the law. And that then distorts how businesses are run, makes it very difficult to comply. And it even makes it even harder now for even investors to come in. Okay, so you want to bring in your money? You're told, yes, you can bring in your money, but if you're going to take out as dividends, then you'll pay 15%, respective of whatever amount of investment you made. So you see, then it becomes a bottleneck as opposed to
so our tax
an incentive for you
to bring in the money and invest in Kenya.
Yes, so our tax process and regime are counterintuitive to all the efforts we make to bring in investors.
Yes. So what needs to happen is the change needs to start at the policy level.
But Evans, this issue of the tax policy has been on the lips of many professionals such as yourself for many years. Why aren't we getting there? What's taking us so long to actually get this proper predictive tax policy in place? There have been drafts, there have been conversations, we just don't get to it. Why?
Now, I think as at now and where we sit, I think it's more of what is at the heart, or probably the interest of the heart of the government that's in place. Is it in their interest to make sure that this thing is predictable? And do they understand the benefits that these changes will drive? Okay. So where this is not understood and enforced and encouraged, then that's why we are seeing the delay. Now, I'll give an example. The Income Tax Act was to be revamped, redone again. And this is almost 3-4 years ago. Okay? We're still waiting for it. And yet, it is one of the most disintegrated laws, so that then you find there are so many twists and turns, so that compliance, absolute compliance, becomes a challenge. So the policy aspect of things need to change, so that then they need to realize, for us to be able to generate this income, for us to be able to create a conducive environment, then we need to get this matter done.
So explain to me again. The guys who are bosses of the Kenya Revenue Authority are the guys at the National Treasury and Planning Ministry. Okay? They're experts on these matters. They're experts on monetary and fiscal matters. They have chewed the book. Why aren't we getting these things done? And even in the previous administration, there was all this talk about, there's a lot of political pressure that comes in, the administration that's in place, the political leadership that's in place. Yeah. But you want to tell me that these experts that sit at the National Treasury, who don't move, they're there. Government A, Government B, Government C, they're there. Are you telling me that they are not able to actually convince their political bosses on the importance of having some predictable tax policy, on the importance of reviewing the laws that need to be reviewed?
They have the capacity, they have the resources, but the interests.
Whose interests? Their own?
Not their own. And that's why I'm saying the government of the day would have its own set of interests. And that will be seen when the law is drafted, and especially tax laws are drafted, because then you'd see they're targeting certain sectors, certain revenue streams, certain, like now there's a big move towards taxation of the digital space. Okay, the argument by most professionals is that it is still a nascent industry, and we should not be hammering it too hard. We should allow it to grow, to bloom, and then by the time we come in, we can be able to collect. However, again, they've been given targets. They had been told to expand the tax base. So you see, they're sitting in a position where it's almost a catch-22. We'd want to see the government raise the revenue, but there's also the demand for this revenue now that then stops all long-term processes and plans for now as we focus on collecting what we are demanded to collect.
So before the pot even has an opportunity to fill, it's already drained. And so isn't that the process that ought to be looked at? That what can you do to actually get some kind of balance here? And it seems almost obvious that should be. That if you then want to have a policy in place that does a number of things, widens your tax base, make sure that there is the proper implementation, efficient use of these taxes, because truth be told, that a lot of the things that are being done are maybe things that would have been done and established a long time ago if we saw these taxes being used with efficiency. And that's another conversation that can be had over and over again. But it seems to me that, they're experts, like you say.
I totally
we
agree
can
with
see
you.
it as the sun is up. We can see it. These are people who are clearly tuned into these things. Should they not be able to see that is obviously the way in which you should be going?
And I totally agree with you in this sense. The aspect of efficiency and how these resources are used needs to be looked into. Okay? If we could cut on expenditure and unnecessary expenditure, we'd create a relief of sorts for ourselves. The current situation now is that money we had borrowed, we wasted, is now payable. Okay? Now, and we can't borrow because we've reached our limit. So
But
we
we
must
still borrow.
collect it from taxes. So that then we do not default and find ourselves in a worse off situation. But government activities have to still go on. So then, I think all of us need to be able to.
I hear you, Evans, but I refuse to go with that line that political pressure overbears professional advice. We have seen it in the previous administration, the 9 years of the Uhuru administration. It was the same issues we were discussing here. Okay, so we need to have predictability in our tax policy. We need to have this and the other. We need to have prudent financial management. All these things that we're talking about, we borrowed and then we spent. Who was expending the money? These guys at the National Treasury. They're the ones who do the budget. They're the ones who release the money. They can see, if you can see that we had budgeted for a road and now we are spending the money to pay salaries, you should raise a red flag.
Come on.
And you cannot tell me that they just sat there because Uhuru was telling them to do it. Nothing like that. Absolutely nothing like that. I have very many questions that I keep asking about this national treasury of ours.
No, I can tell you now. I think the discussion is now going towards
Now you're saying that
discussion
now
of
we
their
have raised
of their capacity.
Nah.
But the reality is this.
If indeed,
Yes.
if indeed they know what they're supposed to do, then they should do it.
To him who knows
The
what
boss-
they should do and does not do it, to him it is sin.
Sin.
It's not
Yes.
complicated.
We've had cabinet secretaries who have risen through the rank of the National Treasury, sitting at the helm of the National Treasury, same as principal secretary. Current cabinet secretary is somebody who has worked in the central bank before, who's been in academia, come on. We can't sit back and say, okay, so William Ruto has not studied economics and fiscal management and finance and all, so he's the one who's running and he's not listening to everybody else. But everybody else at the National Treasury is telling him, no, you cannot raise the revenue target to 2.7 trillion shillings. It's unrealistic. But he says, Akuna, weka. No way.
The people there probably would be dissenting, but at the risk of many other things. But anyway, let me not go to that direction because I may not be fully aware
Yep.
of the workings of the Treasury
Of course.
and all that. However, I'd say the most important thing is that these options and whatever you're discussing here needed to have been implemented over 10 years ago. Okay? The control measures in terms of expenditure and the control of budget speaking and saying we are seeing certain expenditures happening which are not sanctioned and
Yeah.
were not planned for.
Yep.
That should have happened a long time ago.
Yep.
Okay? So that then now we'd be discussing a different story as to probably lowering some tax heads to then trigger economic activity.
Yep.
Okay? And that is the direction which then I think and I'd propose that the government needs to look into. So that then instead of squeezing and milking out everything, put money back into the economy and allow the Kenyans who are very ingenious and who are very hardworking to generate revenue and taxes for you. Yeah.
You know, those who understand these subjects better than we do, and this is where I have to agree with Eric, and many of them are nestled at the Treasury. They know how to stimulate the economy. It's not that they don't know. They know what needs to be done. If we lived in a country where we'd never seen it done, then we'd say, so, but we've seen it done. We've seen the economy simply growing because certain taps have been opened. You can borrow, you can pay, you pay back. But in borrowing, you grow your business. In growing your business, we've seen these things happen. Now we are seeing the complete opposite happening. And yet, we are still talking about how it is we are going to raise more revenue. Honestly, really.
If I can just latch onto that a little bit, and maybe you then can let's have a picture, because we already know from what's happening today, these taxes that are being collected, you know, the targets that are being met or unmet, that we then see when it comes to spending, that 76% of these monies that are collected go toward debt, payment. 12% then goes towards development, and I'm going to put those developments in quotes because even that is a question. The rest of it goes to recurrent expenditure, which we can't even make, and so they need to look for a little bit more money to have that. So the whole thing is doomed to fail from the beginning, because the majority of the collections then are going towards paying off debt. So it's been done wrong from the very beginning. And then you say, let's collect more. And that's when now you see these desperate moves, because that's what I think they are. They're desperate moves to fill a bucket that has a hole in the bottom. And so now when Kenyans start to cry and say, oh my goodness, yet another one. Oh my goodness, come into the airport and this is another one. They do not see it as trying to build an efficient system. What they see is that somebody made a boo-boo and we're now being the ones who have to suffer in order to fill this bucket, which has a hole in the bottom.
I do feel you. But to be very sincere, these efforts we see now should have been implemented a while earlier. then we probably will be having a totally different discussion.
Yeah.
The government needs to watch its expenditure. That's the truth.
Oh, they're not.
They will not. Not only they're not, they will not.
They will not. But
No,
that
they
is,
will not.
and that is the truth.
They have
One,
increased their expenditure. What we approved 2 months ago, they want to add a couple of
Billions.
100 billions. Yeah.
Yeah.
So they are not watching their expenditure.
That we've seen. I mean,
So what
Maybe
else?
they're watching it as in looking at it like this.
So
yeah.
what else?
But,
So let's talk about also the government is towards expenditure. It's not.
It's not.
What else?
It needs to give Kenyans a reprieve. They need to give Kenyans an allowance. In fact, I'll tell you, some of these tax bans are really low and punitive.
Those
I
are
d-
counter. If you're not watching your expenditure, there's no
No
way
way.
you can give Kenyans a reprieve.
Yeah.
Even
So-
if you give us some reprieve in some way, you are going to borrow and you'll have to tax us
to
to
trap in
pay.
that cycle. So.
Anyway, Evans, thank you very much for joining us today.
You're welcome.
Right? Evans Kithinji is a tax professional. He's been our guest this morning. He's also the founder and CEO of Gilded and Bright Africa Limited. We've been talking about KRA's tough position in raising revenue and how it's going about raising the revenue and how it's going about enforcing compliance of the laws that are in place, not even introducing any new laws, but just enforcing the law. Where? Come again soon, Evans.
Thank you.
Keep it here for more conversations. In the next hour, we talk about the cost of living. Good morning, 8 a.m.
This is the Situation Room, the only way to start your day.